Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today's market rallied. Let's see, the Dow Jones was up another 102 points, and I still don't like it. Uh, Not really anything new I can point out. All the technical indicators are still telling us the same exact thing. We have the overbought conditions of the slow stotch. We have the overbought conditions of the RSI, which is extremely overbought, and our market continues moving higher. On Friday, ETF Guide came out with an article which I think sheds a lot of light on this current situation here. They pointed out that they could not identify the increase of about $600 billion worth of capital that went into this market, which is driving it higher. And there's only one group that can make moves like that, of that size, and not disclose it. So we know the Fed is buying this market, and in my opinion, is supporting and manipulating the market. And basically, this upside that we're seeing consistently, I keep referring to it as momentum, but um, it may just be manipulation. Basically, when the unemployment data comes in negative and the market rallies on that, that's momentum, in my opinion. It's going up, but it's disconnected from the fundamentals. The housing stats came in today, they were bad again, and the market continues higher. In fact, it was up 102 points, Dow Jones was, so that's a complete disconnect. The housing market is one of the most propped up, most subsidized markets we have in the U.S., and it's still rolling over. That's not bullish. I don't care, how you do your math. Unless you're Arthur Andersen, this isn't good. Um, anyway, looking at this market, you keep seeing the upside, so you start asking yourself, am I trading this the wrong way? Am I, should I be looking for longs? Well, I've looked, and there's not anything out there other than a couple of day trade kind of moves that I would be making there on the long side, because I think we're in a momentum play here. Your quality buy opportunity was down here. We took that, we played that. This here is secondary. If you're thinking to yourself, if I don't buy in now, I'm going to miss it, well, you're actually not. Because even if this move had the strength, which I don't think it does, but even if it could move all the way up, take this move from here from 10,000 to say 10.7, if you were going to move another leg like that, 700 points to the upside, you would still then have to turn around and pull back down and consolidate, and you would consolidate on previous resistance. This is previous resistance. So right here, whatever you move up here, I don't care what it is. I don't think it's that substantial, but again, this is, in my opinion, this is being manipulated, so who knows how high it'll go. The main point is when they pull back, they will have to pull back to previous resistance to dominate the support, to establish a support line. So you're not missing anything by letting this thing run by you, and that's exactly what I'm doing. Now you know where I stand and why I stand there, okay? Technicals do not lie. The patterns must justify themselves over time. So though you may, be able to run and ignore the signals for a while, at the end you're going to pull back and follow those signals. Plain and simple. Don't be fooled into chasing this market, basically is what I'm saying. If you're not a full access member and you want to be one, go to our website, sign up, pay the $145 for the whole year, and you will know what's in my portfolio and why, and you'll have full access to all of our alerts. We thank you for your time. God bless. Please refer a friend.